Hello everyone, welcome to my new YouTube channel, Pendragon MAS. In this channel, I will be talking about trading and investing using my proprietary trading system, the Pendragon 321, as a guide. The reason it's called Pendragon 321 because it consists of 3 price lines, 2 sets of trading signals, and 1 momentum indicators. That's it. 3 lines, 2 sets of signals, and 1 indicators. Pendragon 321. This system took me over 10 years to develop, and then I have tested in real market condition using real trading capital. It is a combination of my over 25 years of trading experience, so I'm quite proud with it, and I hope it could be of some use to you. So without further ado, let's get right into it. So everybody know the market's been going up and down pretty wild since December and now. So let's see what we can make sense of it. Before we start, let's look at the traditional way of looking at the market. Right here we're looking at the SPY, which is a S&P 500 ETF, the spider, and right now you're looking at the daily chart. So the yellow line is the 200-day moving average, and everybody can see above that, traditionally, if the market's above the 200-day moving average, we are in the bull market. Below it, we are in the bear market. The 200-day moving average is a pretty useful guide, but it's not that precise. For example, in these several places, sometimes it's up above the 200-day moving average, sometimes it's down below the 200 days moving average, right? But overall, it does a pretty good job giving us the general directions. And what's interesting is that for the past week, the price almost touched the 200-day moving averages. And then the last 3 trading days of the week, it came down. Okay? So now everybody wants to know what is going on in the markets. Okay? So for that, let's go to Pendragon 321. I'll be introducing the trading system to you, and we'll take analysis from there. So let me turn off this 200 days moving average. So as I mentioned before, the Pendragon 321 consists of 3 power lines, 3 price levels. The first one is the green line. The green line is the short term. Okay, the green line represents the short term, and the next one is the pink one. The pink one represents the medium term. So right away you can see that they kind of like moving averages. You can actually think of them like moving averages if you want, except they are much better because these lines can help us to predict where the possible market might go. It gives us pretty precise price levels, which we can use as support and resistance levels, and also profit taking or exit levels. And the third one is the purple one. That is the long term. Okay, so that's it. That's your 3 lines. With the 3 lines on the charts, we can generally analyze where the market might be going. Okay, and then you also have 2 sets of signals, which I call them the first one I call a trend GPS. Okay, so right now I added some dots on the chart. In general, it's very easy. If you see the pink dots, those are your confirmed sell signals. Okay, the pink dots are the confirmed sell signals. A pink cross, like the one over here, that tells us the beginning of a downtrend. Does not mean necessarily a buy yet, sell yet. Okay, it tells us a downtrend. And blue cross tells us the beginning of an uptrend. And the blue dots tell us the it's a confirmed long signal. Okay, so we have a few over here. So again, pink is to sell, and blue is to buy. Then the next set of signal that we have 2 sets of trading signal. The next trading signal we have, I call it the triangle. Okay, for lack of a better word, it's very simple. You see like a green line in the middle, that's your neutral line. Anytime we have something above, that's a potential for going long. When they're pointing down, it's a potential for going short. And if right now you see these lines, these are the confirmed long signal. So over here, we have a confirmed long signal for the market. And over here, we have another confirmed long signal in the market. Okay, I'll mark it down in the panel here. Okay, and another one is over here. Okay, the rest of the time when they're either going up or going down, just tell us to get ready. That's it. And lastly, we have one momentum indicator. That's the using the LBR 310 oscillators. This one to give us gauge some momentum. To be honest, if all you know is the 3 power lines and the trend GPS, it can pretty much analyze 80% of all the market movements. The other two, like the triangle and the momentum indicators, are just supplementaries, okay, to this. Okay, so let's look at the market. So right now we have 3 charts over here. On the left chart, right here, that's S&P. This is the daily chart of S&P. And the middle chart, we're looking at the weekly chart of SPY, okay, the S&P 500 ETF. And on the rightmost chart, we are looking at the monthly chart of SP 500. I'm a strong believer that when we analyze the market, we cannot just analyze the market in isolation, because the market is a living, breathing organism. In a way, I can give you an analogy. Let's say the market is like a sphere. Okay, it's 3-dimensional. Every time if you're only looking at one time frame, let's say the daily chart, what you're doing in effect is slicing the sphere, this ball. Okay, you're taking a slice of it, and you're only looking at one slice, trying to see the totality of it. It's not gonna work. It's kind of like the famous story of the 3 blind men and the elephant. Okay, each one touched one part of the elephant, thinking that they have the entire picture. That is simply not the case. In other previous video in my previous channel, I have talked about how the markets actually consist of players of different sizes, okay, and they all look at different time frames. For example, on the monthly chart, these are looking by the biggest players. These are the biggest funds. Okay, you have your like Fidelity, BlackRock, Vanguard, or even some sovereign wealth fund, or even let's say people like Warren Buffett. He probably don't even look at charts. People at this scale, they probably make trading decision once a year. Or sometimes, you know, in case of Warren Buffett, he probably make a trade decision once every few years. Okay, so that is operating in the market. And right away on this chart, you can see, even though we look at the monthly chart here, still the same like before. You have 3 lines: the green, the pink, and the purple, right? And you have your sets of blue cross, pink dots, that's the short signal, and the blue cross is a long possible trend, and the blue dots are the long signal. So for example, right here, okay, we have 1 blue dot, that's a potential long signal. This is another potential long signal. I mean, no, it's actually confirmed long signal right here, okay. And you see the middle panel right here, you see the green dots. Green dots give us alert, okay, but the blue one is the confirm. So sometimes if I don't want to plot it on the chart because they might get too crowded, what I would do is just turn that off, and I can look at the bottom in the middle panel right here. Okay, and let's turn that back. I'll give you an example right here. So when we turn back, you guys see back here, which I draw the line, I'll blow it up. On February 28th, okay, 2011, this is a monthly chart. You will see a blue cross right here, which corresponds to the blue cross right here in the first panel. So all that is that I'm taking the drawing from the top to the middle so as not to crowd my charts too much, but they work the same way. Okay, so the green gives us warning and blue gives us confirmation. So these are monthly charts, so they operate on long time. Right away, we mentioned we have 3. So we have 1 from September 30, 2011. That's the first confirmed long signal. It will go long according to the monthly chart on the SPY. And the next one occurred right here, September 30, 2015. That's 4 years later. That's another, from the monthly chart perspective, confirmed long signal. because it's a blue dot. And finally, we had just another one trigger the end of last month. Okay, so from the from the monthly basis, the chart is quite bullish. Okay, so that's one time frame. The next time frame I'm going to look at is the monthly time frame. Now, the monthly time frame, the weekly time frame is slightly different now. We see a pink cross pointing down. That's telling you that it's a possible beginning of a downtrend. And then what we see here is that we have two sets of red signals right here that give you potential alert. That means that when the market reverses and go down, then the downtrend can resume. Okay, but just based on these trend GPS signals. Okay, so again, you see the three lines, two sets of signal operate on the weekly chart. And finally, let's look at the daily chart. Right away, if we want to look at it again, we can see this is beginning of a downtrend with the pink cross right there, and we have three pink confirmed sell signals, and everybody can see those worked out pretty okay. That's when the market started to go down, and then the market being rallied back up, and then a little over a week ago, we have a first blue cross on the daily chart now that gives us a possible long signal. That means the uptrend has begun. Okay, and also on the daily chart, it gives us a possible pointing up, possible alert for going long. Now, at this point, I want to mention something to you guys. A lot of time when people in trading, they spend a lot of energy on trying to predict the market. That's exactly the wrong thing you want to do, because when you predict, what happens is that you lock yourself into one possibility. What professional traders do instead of prediction, they are really more into estimation and preparation. What do I mean by estimation? Estimation means you try to map out all the possible likely outcome of the markets. But in reality, this is actually quite easy because there are only really three possible outcomes. The market can either go up, go down, or not going anywhere. So in reality, in estimation, we already know the three possible outcomes. What we are really doing when we're doing estimation is try to assign probabilities. Okay, just like when we try to predict the weather, we could say, oh, tomorrow there may be a 30% chance of rain, or it's cloudy day, or 70% chance of snow, so on and so forth. When you assign a percentage, you are no longer locked into one single possibility, such as prediction. And when you try to predict something, okay, after you do all this analysis and you do a prediction, even though the extension is very subtle, but psychologically it locked you into a more adverse psychological aspect, because when you try to predict something and you told yourself or you told other people, say, hey, I think the market is definitely going to go up tomorrow, what happens is that your ego gets involved. And what happens when the market doesn't go down or doesn't go up tomorrow? Okay, instead it goes down. And oftentimes depends on how your ego goes. Some people actually hang on to their losses. Okay, and if it spirals out of control, you could be losing a lot of money. So instead, what I want you guys to think of estimation. Map out all the possibility in the markets, assign them probabilities, and you prepare for all kinds of possibilities and act accordingly. That's infinitely more powerful than trying to predict the market. And my trading system can do just that, because they give us ability to prepare, to estimate, rather than give us set predictions. You could do that too, but I would prefer that we see it from the view of estimation and preparation. Okay, let's delve a little bit into the lines. Okay, let me get rid of all these drawings I have on thing right now, and I'll show you how these lines work really in sync with each other. Well, for those of you who have analyzed the market using moving averages, and you also heard the multiple time frame analysis, and people start drawing these lines. So right now we have 3 charts. You really have 9 lines. What happens is that you basically have 9 different lines, right? And one of them bound to hit. That is not really analysis. That is really kind of like guessing. Okay, and if you had different across different time frame, all of a sudden what happened is that they become very confused, and they don't do us much good, because the more line you draw, at least at least one of them will hit, and at the end of the day it become conflicting and become confusing. It's no good. So let's look at what how effective these lines are. So first of all, we're looking at the left. Okay, left is the daily chart. So the green line is always the shortest time frame. Okay, so there's not much we can do, because it's already the shortest time frame in this respect. So let's turn that off. Okay, so the pink line is the medium term. Okay, what is the medium term? So let's look at the pink line only. And also let me turn off the these trend GPS from the chart. It's more clear. Okay. What is the medium term on a shortest time frame? It's now on the daily chart, right? It's now the short time frame, or the green line, on the medium term. So let's turn off the other two color. So right, again, the medium term on the daily chart, the median time frame, the median term should be the short time frame on the weekly chart. Okay, so what do we have here? On the daily chart, the value is 260.88. Everybody see that? It's right over here too, the pink one. And now in the middle, it should be the green line, right? The value is 260.37. You see how close they are? They are only off by, one tells us 260.88, the other one tells us 260.37. They only off by 0.51. And what's 0.51? That's 0.0019, or 0.19%. Okay, that's about 0.19 of 1%. That's how precise they are. That's how close they are. Okay, now let's do the similar exercise. So now logic dictates. So now we're going to look at the medium line on the medium time frame. That will be the pink. So now the pink line on the medium chart, right? Okay, let me just get rid of these lines, because we're not looking at the daily chart anymore. Should be, again, now we're looking at the monthly chart, should be the green line on the monthly chart. Okay, so let's look at the value here. It's power 2. Okay, it's 267.76. Okay, let me put this chart over here so everybody can see. Power 2, 267.76. So that's the value of the pink line on the medium time frame, which should correspond to the shorter, which is the green line, on the longer time frame. The longer time frame gives us what? Power 1, 267.11. Okay, everybody see that? We used the same logic before on the daily chart to the weekly chart. Now we're using the weekly chart to the monthly chart, right? What is the medium term on the weekly chart is now the short term, which is the green line on the monthly chart. So now these two, now the value, look how much they off by. 267.67 minus 267.11. That gives 0.56 in terms of percentage terms. It's off by 0.020, or 0.2%. Again, that's how precise the numbers are. So for all practical purposes, the pink line in the medium time frame is the green line, the short-term line, and the longer time frame, right? So no longer, so by using this system, we now do not have 9 different separate lines that are not even they are not even related to each other. Instead, we have 3 sets of interlocking lines that work in sync with each other, and that can help us better predict the markets. Okay, or help us understand where the markets are. So I'm going to put back all these 3 lines, and we'll delve deeply into it, see how these lines can help us. Okay, so first of all, with these lines, we're going to look for important price levels, because again, the market tend to be attracted to these price levels, to these lines. I'll give you an example. Let me blow up this chart bigger. So for those of you who are looking on a cell phone, it's easier for you to see. Okay. First of all, right here, look at it. The market has been going down, drop, free fall. And why is that? It's very simple. Because look what happened. The market's basically being free fall since around here. Okay, that's where I put a red arrow. Also, I'm gonna put a little box, see if I can to make it easy for you guys to see right here. And that is well, let's use December 10th, 2018. The second week of December last year. Why is the market a free fall? Because if you notice, the market dropped below all 3 lines. Okay, it dropped below the green line, the pink one, and the purple one. There's no more lines below it. So what that means is there's no more support underneath the market. As a result, the market is free to fall that much, and which it did. Okay, that's why the market dropped so much. And then the market started to rally back up. Okay, and of course, nothing goes straight up. The first level that market pulled back down, it's right over here. Look how the market could not break below the green line, and it went up. And the next level it tried to look for, it touched the pink line over here. It hovered for quite a few bars, for 4 bars, 1, 2, 3, 4, before going up again. And the next level it go up to, look what happened here. It touched the purple line, could not quite break above it, right? And it bounced back down. And when it bounced back down, it didn't even have enough power to touch the green or the pink line underneath. So it tells us that the market is really, really strong. So as a result, okay, the market went up. Let me try to get a larger pointer. Here we go. Okay. So, and the next one it went to, it bounced back up to the purple line again for the second time. Everybody see how it couldn't close above it? And it did the same thing again. It retraced a little bit, cannot even touch the green line, and the market went up. And at this point, the market finally catapulted above the purple line. Okay? And that took place on January 30th. And just like as in the downside, something the upside, there were no more lines up there. Okay, so the market is free to rise up a lot. And that's exactly what market did for the next few days. Basically went up like a lot. Okay, until you almost touched that before the 200-day moving average we saw, the market started to pull back. And now the market pulled back. What the market really wanted to do is what? The market really wanted to reach for this level. Around, right now you can see it's a convergence of the green and the purple line. So this is very significant because you have 2 lines over there. So if according to the chart, the green line is 266.42. And the purple line is 266.59. So this is a quite significant level because where the 2 lines meet, that could be a potentially strong support level. Okay, so if the market ever touched there, there's a very good chance that the market might bounce back. Okay, so right now, but there's such as a attracting price to the market. But if we look at the middle panel on the triangle GPS, it gives a potential signal to go long. So if market next week rally back up, reversed to go up, continue to go back up, and then that could be a strong indicator. The market should go up for quiet, could be stronger, could be a strong rally up. Okay, but the market really want to go down and see if you attract there. Now, where else we can see the clue here. So before we had from previous 267.67. Okay, that's what the line. I'm sorry, the pink one is power to 267. 76, 30, 76. Okay. So these levels are quite similar. If you look at it, 266.59, 267, 267.76, they only off by a 1.17-ish. So that is going to be a very strong support level. And furthermore, if you look at the green, on the monthly chart right here on the green line, that value 267.11. Okay, so there you have it. On the high end is 267.76. On the lower end is 266.42. And we have these green line from the monthly chart intersect with that. So you see how close all these values are. So that might as well be one giant strong area of support for the market. And realize now, this is 3 different sets of data sets. Okay, even though it's the same formula, calculating from 3 different data sets. The daily chart, it's what, 5 daily bar make 1 weekly bar, and then 4 weekly bar make 1 monthly bar. They are all calculated from different data sets, and yet, it's the same sets of formula. Okay, the numbers are very, very close. Okay, so that's how you do multiple time frame analysis. So you no longer have 9 separate individual moving averages giving you 9 different values and telling you 9 different things. Instead, it's really just 4 or 5 lines across 3 different time frames, and they're all interlocking, they're all working together. Okay, that's how you know the system is robust. So that's the thing we need to watch out. So again, on a daily chart, the market has a potential to go up. And it seems like today's price action, the bulls really want to push the market up, because after all, from the monthly chart, it's quite strong. If they pull up, if they push the market up, the bears had to worry about it, because now there's nothing on top. So it could be a strong rally. And my personal feeling is that if this thing goes up, it's going to go up above the 200 days moving average. Okay, but if it goes down, you first have to clear below these all these numbers right here. Below through this level. Once they can clear below this level, the next challenge will be over here. That's 260.88 on the daily chart, or 260.37 on the weekly chart. Okay, let me just label them real clear for you guys to see. Again, you see how close the numbers are? 260.88 and 260.37. Okay, and over here on the monthly chart, 258.97. 258.97 might as well be 259. So it's basically between 260.88 and 259. That's how precise these numbers are. So, and once you crack below that, it's 230.15. So basically, you really only have 3 sets of number. Okay, the first set is this 266.42 to 267.76. The next set of numbers around the 260s. All right, and the next set of numbers around 230s. So let me repeat that again. On the high end, the first set is about 266 and a half, give or take. Okay, the second number is around the 260s and a half, and the third one is 230. So instead of 9 different individual numbers, and you can just pick one of them is going to hit. On these 3.5, you only have 3 numbers to watch out for. But this also tells us what? For those think that the market is going to have a smooth crash down, may not be so, because you have to clear through this 3 major level of support before you can have another smooth crash or downward movement. But if you could, then watch out below. Okay, so right now definitely the momentum is still favoring the bull side, but that doesn't mean the bear case cannot happen. Again, like I mentioned before, estimation and preparation is more important. We react to the markets. Okay, we don't try to lead the markets. The market goes up, we know what to do. Market goes down, we know what to do. And with these price level and with these signals, it gives us precisely that. And that's what separates the professional traders from the amateur traders. The amateur traders want to predict. Okay, the professional traders want to prepare. Okay, it's like a chess match. You have to, while you can anticipate what your opponents to do, you can never know exactly. Or a lot of people use the analogy of poker. the game of poker to trading, which is, I think, quite, it could be appropriate in certain respect. Like you have no control how the card's going to turn, but you can try to play your hand, put the probability on your side. Are you going to win all the time? No. But if you play your hands right over the long run, you're going to have to win more consistently. Okay? So this is a very brief introduction for my first video on this channel. And if you have any question, please leave me comments. And by the way, this system can analyze any instruments. We can analyze commodity futures. We can analyze options. We can analyze Forex, spot currencies. So anything or individual stocks, if you guys are interested, please let me know. We'll take a look at it. Oh, one more thing before we go, and just for fun, let me clear all this thing. So right now we're looking at a daily chart, and some people trade intraday charts. Let's see if it works on the intraday chart. I'm gonna go to a 1 minute chart. Everybody see that? Right now we have a 1 minute chart. It's looking at a 1 minute chart of SPY, and as many of you know, as you go smaller and smaller into the time frame, sometimes in trading indicators and the trading system breaks down. So let's see if this is the case. So right away, you see the lines, right? How they hug the lines very beautifully. That acts a very strong support, right? And more importantly, if you look at a trading signal, right here, it gives us a potential, this means the beginning of an uptrend. That's the blue cross. And right here, we have a blue dot. That's a confirm a long signal. Okay. And by around here, we have a confirmed sell signal. We can take profit there, or based on the lines, we see what happened, and we can judge that. And remember, the principles are all the same. Okay, let me blow up right here. Around this area, guess what happened? Remember before we mentioned, when the price cleared through the lines, when there's no more resistance above, they're free to take off. Okay, and this is exactly what happened. Look how the price took off the last 5-6 minutes of trading at the end of the day. Okay, and don't forget, we're looking at 1 minute charts now, and the principle worked the same across all time frame. Doesn't matter we're looking at the 1 minute chart or a monthly chart. Okay, and this is quite a powerful run up for on the 1 minute chart. So let's say it took off from 169.73 all the way to 170.50. So that's almost a whole full point catapulting in 5 minutes on a 1 minute chart. So if you're day trading super fast, okay, in and out for 5 minutes, you can capture a whole 1 point just based on this trading system. Okay, so just for fun, let's go even smaller time scale. So we're looking at a 1 minute chart now. Let me remove all these drawings first, clear the charts. Okay. How about we look at 1 tick chart? This is 1 tick. Okay, the green line is the price action. This is tick by tick, tick by tick. Okay, so it's every transaction the market moves. So right away, again, you should be familiar by now. Look for the pink dots and the blue dots because they are confirmed buy and sell signals. So we have a sell signal right here, pink dot, and we have our first blue buy signal over here. So here we'll be shorting. I'll put a red arrow there with a line. And here will be longing. Again, this is tick by tick. This is 1 tick chart. Okay, look at it right here. SPY, 1 tick bar, right? Everybody see that? Okay, long, 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 long. There is no dots over here. You can, remain to your long until a until a sell signal right here. So in all this thing, you'll be selling. Let me put a label it. Sell for S. B for buy. Sell again. Okay. And the interesting thing is that how long did these are tick by tick chart now? Okay, how long did all this transaction happen? The first one happened at 15:59:58. So it's 3 o'clock 59, 3:59:58 second. Okay, and about a second later, 59:59:59. Okay, we have our first long signal, and you get long over here, and then you'll get out within a second. 59:59:59. Everybody see that? It's still within the same second right here. Time frame wise, these two are the same. So this is definitely not for the faint of heart, and I think it will be very difficult for human being to execute, because there's, first of all, the speed limitation, and not to mention the commission considerations. But if you're a high frequency trader, okay, you have access to very fast computers and very low commissions, you can probably pull it off. Okay, and this is algorithmic trading again, and we are now entering the realm of high frequency, and my chart only go up to 1 tick. And I suspect that if we have even finer data, we can go into the microstructure of it. The same relationship will probably hold. Okay, so this concludes a very brief introduction in my first video. Please let me know what you think. Leave any comments, and if you like it, please subscribe. And I will see you in the next video. Thank you very much. Take care. Bye bye.